Three tech stocks for this October. It's been a tough year for many of the best stocks to buy and watch, hurt in part by a sharp rise in 10-year Treasury yield amid an increasingly hawkish Federal Reserve. But a handful of the best tech stocks are holding up as well as the stock market tries to bottom. Now, stocks with high PE or PDE ratios like Tesla and Nvidia have been hit hard by institutional selling this year, along with the security software stocks like CrowdStrike and Zscaler. A rise in interest rate environment isn't good for the best stocks to buy in the tech sector with high multiples. Well, why is that? Basically because it makes for a more challenging operating environment. If the stock market senses any possibility of a slowdown in earnings growth from high PE names, the selling will hit these stocks first. But the Nasdaq Composite and S&P 500 showed bullish price on volume Friday, closing out the week with high percentage gains in high volumes. But both indexes confirmed a new uptrend on day 7 of their rally attempts. Now, the debate starts as to whether or not it will be a tradable rally or the start of a new bull market. The 50-day moving average for both indexes looms large as a potential resistance level. Now, let's look at top trades of best stocks to buy. Now, the best stocks to buy and watch aren't hard to find as long as you are fishing in the right pond. Top stocks like Wolfspeed and Shockwave Medical don't get a lot of attention, but both have characteristics seen in the past stock market winners before big price moves. The best stocks to buy and watch boast strong fundamentals along with leading price performance in the industry group. Many also show favorable fund ownership trend. The best tech stocks also trend to show resilience in down market. Now, use IBD stock checkup to quickly identify industry group leaders with the potential to be stock market leaders. Now, screening for the best tech stocks to buy and watch is as easy as looking at the Market Smith Growth 250, a daily screen of high quality stocks. Click on any column header to sort the screen as you wish, either by those closest to their highs, stocks with the highest composite rating, or stocks trading up in price with the heaviest volume. The best tech stocks to buy and watch aren't guaranteed to be huge stock market winners, but they do have qualities seen in the past stock market winners before big price gains. The best tech stocks to buy and watch now include Paylocity, Shockwave Medical, and Arista Network. With the stock market still in a correction, none of them are buys currently, but when new institutional money starts to come in from the sidelines, all five could easily resume their market leadership held in part by strong fundamentals. Paylocity stock. Amid a lot of carnage in the enterprise software group, PCTY soared in early August after a bullish earnings report. It had been holding support at the 10-week moving average, but support recently gave away. Watch for a new base to form as a PCTY holds support at its 40-week line. As a cloud-based provider of payroll and human capital management software solution, Paylocity operates in a crowded industry, but a consistent track record of earnings and sales growth and solid annual earnings estimates make it one of the best stocks to buy and watch among enterprise software firms. In early August, Paylocity reported another quarter of big earnings and revenue growth. It also raised its revenue guidelines for the current quarter and full year. Paylocity's next earnings report is due November 3 after the close. Now, the consensus estimate is for adjusted profit of 61 cents a share, up 3% from the year-ago quarter, with revenue up 32% to $239.8 million. ANS stock. On the weekly chart, Arista Network's relative strength line has backed off highs as the stock struggles to attract buyers. To its credit, ANS stock recently bounced off the 100 level, but an accumulation distribution rating of D- is weak, hurt by signs of institutional sellings in the stock that started to show in mid-September. Arista is a provider of cloud network solutions to enterprise customers. Earnings growth has accelerated for 3 straight quarters from 32% to 35% to 59%. Revenue growth is also accelerating, a sign of strong demand for the company's product. The company's next earnings report is due October 31 after the close. Adjusted profit is expected to jump 42% to $1.05 a share, with revenue up 41.5% to $1.06 billion. Swave stock. Now, Shockwave Medical is in the process of transforming the way calcified cardiovascular disease is treated using sonic pressure waves for the treatment of calcified plaque. Shockwave, which launched its IPO in March 2019, still sells at a sky-high multiple, but that's largely because of its 6th straight quarter of triple-digit revenue growth. The company is expected to produce its first full year profit this year, with annual earnings of 38% in 2023. Now, mutual fund ownership has been steadily rising in recent quarters, a good sign as fund managers embrace the company's growth story. Now, chart-wise, Shockwave is a new consolidation after a bullish breakout during the week ended August 12th. It moved back above the 10-week line, would improve Swave's technical picture. For now, the buy point is 315. Now, Shockwave's next earnings report is due November 7 after the close. Quarterly profit is expected to come in at 6 cents a share, up sharply from 5 cents in a year ago quarter. Revenue is also seeing soaring 93% to $125.85 million.